Today, I want to show you how to find high probability setups using top-down analysis and what's the exact process for my analysis week by week, how I find profitable setups and be on the right side of the market more often than not, First, we start with the weekly time frame in this case. I have the NQ micros. And as you can see, the weekly time frame is clearly printing higher highs and higher lows. I have only marked here 2 swing points. As you can see, here is the market making a high, then a higher low basically, then a higher high, higher low, and then this high, So the market in the weekly chart is clearly making higher highs and higher lows. So basically, we know that we are in an uptrend. We are only based on this analysis. We are only looking for longs. Then when we scale a little bit further down to the daily, you can see also here is the weekly swing breakout structure. And in my opinion, this is also for me the daily swing structure. So this smaller higher highs and higher lows, what you can see here, it's basically for me, I see it as internal structure. And as you can see here, as I marked already for you, daily at here, the last internal pullback, this was here, you can see this high of the candle was lower than this. So here was an obvious pullback, then a push further to the upside. So this is internal structure for me, from this point to this point. And the daily, as you can see, of course, he wicked the liquidity below this low, but he did never close below this wick. So the daily stayed bullish in this case. The daily stayed bullish. It did not flip bearish. And let me delete this for a second. So also in the daily time frame, we are also looking for longs. And when we scale further down to the 4-hour time frame, you can see I have already prepared something for you. The 4-hour time frame, in my view, this was the last swing structure in 4-hour. From here, this was the high, higher low, high. And then if we want to look for further longs, then we have to take care on this area. At this area, when in this case, you see the 4-hour did clearly reject this level multiple times. You see many wicks from the downside. It rejected it multiple times, and it only wicked the liquidity below this level because here is a lot of liquidity. He wicked in this liquidity and then got another strong rejection. So in this case, the 4-hour never closed below this wick, and it also never switched bearish from the swing structure perspective. Of course, internal, it was bearish for a little bit of time, but from a swing structure perspective, it never switched bearish. So the bias is intact from this standpoint. We only look for longs. As we see this area here, as we see this, we can not predict for sure, but we can anticipate that the market will most likely move further to the upside, And this is the basic framework. And then you can, of course, zoom a little bit further down. For me personally, I zoom for a structure. The smallest time frame, what I am looking for is the 1 hour, When you zoom in the 1 hour, I don't know if you are already familiar. I hope you are already familiar with swing structure, internal structure, and fractal structure. If not, let me know in the comments. Then maybe I will make another video in the future. In this case, you can see this was the 4-hour swing structure. And then what I have marked in the 1 hour as breakout structures, this is basically it's the 1 hour swing structure, but from a 4-hour perspective, it's the 4-hour internal structure. It sounds a little bit complicated, but maybe as I explain it to you, you will see the pattern. What are you looking for? So if you're familiar with strong and weak structure, this low is strong. Why? Because it broke structure to the upside in the 4-hour. It broke this high. So this in theory should be strong because it did its job and it broke structure to the upside. And then when it returned, it never closed below this point. Of course, this was a big big mistake from my perspective in the beginning, because I always thought to myself, when this is strong, the chart is never allowed to breach this, But of course, it is allowed to wick below, take liquidity, and still stay strong in this case. So the basic idea is the H1 time frame. In this case, it was here. It was bullish. Higher highs, higher lows, higher highs, higher lows. And then in this case, it took out this strong low. So in this case, the 1 hour for me, in this case, as this was for me one leg to the downside, because this small little thing, the small little pullbacks, this is for me internal structure in the H1. But for me, this is one strong pull, one complete pull leg to the downside. And then this was for me the first significant lower high, so internal pullback. And then it makes lower lows and lower highs. So as soon as the H1 flipped bearish in this case, this signals that the H4 wants to make the swing pullback, I hope I don't confuse you too much, because it's a little bit hard to grasp at the beginning, but this is very basically very simple. As you can see, first the H1 stayed bullish the whole up move in the 4 hour, and then as soon as the H1 switched bearish, it stayed bearish the whole time until we completed the swing pullback. And then as soon as the H1 in this case, as you can see, here is the last lower low, lower high, lower low, lower high. Here is the market printing the last lower low. And after it took out this 4 hour liquidity, it printed a new higher high in this case. You see? So the market switched from bearish to bullish. So basically, this is how I frame my trade ideas. And it depends, of course, at which time you are starting, For example, if you are entering here the market, for example, then okay, as we just saw, the weekly chart and the daily is bullish, and the 4 hour also, but we are in the pullback phase, we are in the swing pullback phase from the 4 hour. And there also are coming inefficiencies into play. As you maybe are familiar with, there is an inefficiency in this candle, also imbalance or open price range, and the market, when it's pulling back, it's most likely to fill this little imbalances, because these are basically you can see this. For me myself, I see this as unfilled limit orders. Here big institutions stepped in with huge orders, and because there is an inefficiency in the market, the market on the pullback phase will most likely go there and fill these imbalances before it gets the next push to the upside, And for example, as you already saw the framework, if you are entering the market here, of course, it's getting more dangerous to short the market in this case. Why? Because when you use a premium versus discount tool, then you see we are already in the discount area from this 4 hour swing. It does not have to take out every time this low, But as you can see, there's always there's still a little imbalance open. So you can base your trade idea around this. You can say, okay, the 4 hour is bullish, but the internal structure is currently bearish. So I'm looking for a short from this extreme supply zone, for example, from a supply zone, and I trade from this area to, for example, this point below there, And then when the market returns to the supply area, then it gets a tap in, and then it moves further to the downside. This is the logic behind it, and you cannot, because most of the traders, they want to exceed their target further to the downside, but this is not the objective. You have always in mind. You have to have always in mind what the higher time frames are doing, And this short trade, it's only possible because as long as this imbalance is not closed, it's more likely that the market will return to the downside. This is very important to understand. Once this imbalance is filled, and in addition, the market, of course, is here taking liquidity. Of course, here it's not valid. Also, I don't want to tell you go short, for example, from this place here, you know? Why? Because this is the complete extreme. When the market pushes down and you want to go short here, it's very low probability because this imbalance is already filled here, you know, and that the market will make another leg to the downside. It's not very high probability. So at this point, you have to simply wait and sit on your hands and then look what the market wants to tell you. In this case, the market pushed further to the upside, switched bullish again, internal. As you can see, here switched the market from lower lows and lower highs to higher highs and higher lows. And so on, you know. And the thing is, as soon as it switched bullish again, this is the confirmation that the 4 hour will continue to the upside. The confirmation that this is most likely the next higher low in the 4 hour chart. And then from a logical perspective, if this is not shifting, so if the 4 hour or the daily or 1 hour, whatever, if the market is not switching bearish here, then this should still be a strong low. And when this still is a strong low, then we have the anticipation that this 4 hour high is still weak, you know? And this is exactly what happened. That now the market is again printing higher highs and higher lows. And for the upcoming week, I'm anticipating that at least we get a further leg to the upside to at least wick this liquidity. And then we have to look what the market is telling you. It could be that the market is after the sweep or from this liquidity. It could be the case that the market then switches bearish again, and then maybe after it took out liquidity, it's possible to get a huge sell-off, you know. But the anticipation for now is for next week that the market will take out this liquidity as at least. So we anticipate a further leg to the upside, and then you have to wait what the market is telling you, you know. Of course, this could go on for a long time, but as soon as we have, for example, we have a break structure and we push further to the upside, you have to be aware that from this new range, this is the new higher low, and when we extend it, if you take long trades in this position, you have to be aware that from this whole leg to the upside, you're already in the premium. You see, this is the discount area, this is the premium. You're already in the premium, and you want to long in the premium, and this is basically the recipe for disaster from a ground perspective, because smart money wants always buy low, sell high, or sell high, buy low, you know. And if you try to go long, for example, if you try to go long here and swing for the fences, you are most likely to fail, because this is not how the market works. The markets work, you know. Normally, maybe you get a thrive to this level, and then the market will make another swing pullback, you know. This is the reason a lot of you are failing when you are chasing the price, for example. Yeah, for example, here, a lot of people, when they see here the market is pushing so strong to the upside, and then maybe a lot of people, they place, for example, here a long trade because they are anticipating that the market will pump to the moon, you know. And then you see a few hours later, it failed. Why? Because you are already from this leg, you're already in the premium, and smart money wants to sell in the premium. They don't want to buy in the premium. You have to always use the analogy. For example, when you are a car dealer, you know, when you are a car dealer, and this price, you have to imagine you want to buy a car. Maybe I can, let's say we want to purchase a home, and the home price is going from this to this level. So ask yourself, if you want to buy a house, you know, if you want to buy a home, do you want to buy the home on the most expensive price, or do you want to buy the home for example, from the last longer period? Do you want to buy your home on the most possible, on the lowest possible price, what's in the current situation possible? Of course, you want to buy your home here. And then when the price after you purchased your home, the price rise again to the upside, and then you can basically you can sell here the home for a big profit, you know. And the other way around is the same. When you want to sell your home, of course you want for example, in this range, don't want to confuse you, but in this range, when the price is in the absolute premium, then on this range you want to sell your home, you know. You don't want to sell your home at a discount when the price is already low. You don't want to sell it here, right? You want to buy it here and you want to sell it here. And this is the basic principle what smart money is doing every day. And yeah, I hope I didn't confuse you too much with my with this concepts or with this logic I want to teach you. If you have questions about it, please let me know in the comments. If you didn't understand it properly, I can do another videos to help you out, guys. But this is a very simple framework. And as you can see, if I make it a little bit more clear, it's a very simple framework. We are basically looking at the 4-hour chart, and then you have to always consider the internal structure. And as soon as the internal structure is shifting bearish, it stays bearish the whole time until we get to the extreme point, and then it shifts bullish again, and then it stays bullish all the time until we probably take out this high. It's basically a very simple framework, and with this in mind, you are most likely to be most likely be more right than wrong from your buyers, from your intraday or from your daily buyers. And yeah, this is how I frame my basic daily trading ideas, you know. So if you like this content, don't forget to subscribe, hit the like button, and let me know in the comments, if I confused you too much or if you did fully understand this. And let me know your biggest challenges right now. Maybe I can help you out in the future. And yeah, let's see you in the next video.